Good morning and welcome to today's webinar from East Capital Group in Stockholm. My name is Marcus Ragmark and I work as a member of the sales team here at East Capital Group. As a Swedish asset manager with Swedish values, sustainability has always been at the core of our operations and how we manage our investors' money. And in today's webinar, we will discuss our sustainability approach in a bit more detail across East Capital Group, and more specifically, how we believe it also adds and creates value to our investors. Our sustainability work is also covered in much more detail in our recently published 2023 Sustainable Investment Report, which I strongly encourage you all to read through when you have the chance. With us today is East Capital co-founder and Chief Sustainability Officer Karine Hirn, as well as Portfolio Manager of Espiria SDG Solutions Fund, Huizi Zeng. So welcome to you both.
Hi, everyone.
Thank you. Good morning, everyone.
Before we begin, I would just like to remind our viewers that there's a Q&A function in the top right hand of your corner. So as we go through the webinar, in case you have any questions, just feel free to pop them in the chat there, and we'll make sure to answer that before we round off. So let's dive right in then, and we will kick off with Karine. So engagement is one of the key pillars of our sustainability work here at East Capital Group. And in 2023, East Capital engaged with a total of 85 companies and a number of engagements which equaled 98 throughout the year. So Karine, what I would like to ask you is whether there have been any major themes across these engagements, and whether you can share any particular successes and how we are able to drive our agenda despite our comparatively smaller size compared to some of the global asset managers.
Yeah, well, great questions. I'm very happy to that we actually start focusing on engagement in this webinar, because as you said, it's always been a core function, I would say, and a core objective of our work, as we believe it's one of the key elements for us to provide value basically to our investors in terms of both in terms of actually enhancing returns, but also increasing, of course, sustainability practices in our portfolio companies and across the markets we're investing in. So as you mentioned, yes, for East Capital itself, this is just a number actually for East Capital, which is focusing on emerging and frontier markets, while we will be talking a little bit more about Espiria later with Huizi. There was engagement with 85 companies. Definitely one of the major theme is environmental issues. It's actually 60% of all the engagement we had during the year, and environment is including, of course, there's a wide range of topics that are covered in this, but the climate remains a key one, but increasingly as well nature and biodiversity and deforestation, and how companies which are high-risk companies because of the nature of their business, but also because of the markets where they operate, will be seen as high risk by ourselves when we do the assessment. So that's one thing. Also, obviously, corporate governance has always been very important as well. And here we keep focusing on these issues, which here again could be anything from encouraging companies to have a better oversight on sustainability issues, but also making sure that they have, for instance, proper independence, being represented, like independent directors on the board, and they have good capital allocations. So in emerging markets, this is really important, definitely. But I would say as well in other developed markets as well, it would be wrong to think it's only about emerging markets. But what I would like to mention as well is in emerging markets, of course, there's a lot of focus on just pushing for more disclosure. And why is that important? Well, well, because we sometimes have companies operating in jurisdictions where there is less regulatory pressure from authorities to force for disclosure, and that is our role as a responsible owner to support this push, so to say. So we really insist on that. And as your last question hinted at, that of course we're not the largest investor in the world, but the thing is, it doesn't really, it's not a question always about size. It's both a question of how diligent you are to follow up. It's also a question of how you are able to cooperate with others. And there we are very keen on collaborative engagements. We are members of a number of associations and initiatives, and we really believe in this way of working together to achieve results in this space.
Thanks, Karine. And I know we'll get into the importance of collaboration with other investors as well a bit later on. Moving on then, I know these engagements that we do are very much targeted and based on our proprietary analysis, which includes this notion of KYO, meaning know your owner, which has been of the utmost importance really since East Capital was founded back in '97 and remains to be so. Can you just elaborate on what we mean by this? And can you elaborate in particular on the importance of the shareholder structure and not least the controlling or the main shareholder in determining our view on corporate governance and more generally a company's ESG credentials?
Yes, so corporate governance accounts for a very important part of our ESG scoring across the board for both for Espiria, East Capital, and that has always been the case. And here within corporate governance, we do spend some time analyzing, understanding, assessing the quality of the other shareholders. So that's why we came up with the idea of, we call it KYO, know your owner. And it's maybe, I would say, more important within emerging markets. And the reason is just because within emerging markets, there's a lot of still, ownership of the companies that are listed can very much be more connected, for instance, to founders, entrepreneurs. Whereas in developed markets, clearly we have now more and more just more of an institutional nature of the ownership. And if you have, for instance, very large funds, passive funds that are investing into these companies, it just, it doesn't really matter how you will be trying to assess their work or ambitions and objectives, because they are by definition passive investors. Whereas in emerging markets, again, the identity and the reputation, the backgrounds of these entrepreneurs could be really important, because usually they are still important shareholders. They usually still sit on the board, sometimes combining the role of chairman, CEO, and, as I said, main shareholder. So it's really important. So what we are looking for is alignment of interest, because it's key. And we have different ways of, assessing the alignment of interest, such as looking as well at how for instance, the management is incentivized, and when the shareholders are also part of the management, for instance, and looking as well of the board composition. Clearly, here I would like to say that we also, as we were mentioning, collaborative engagement. It's worth reminding as well that that's also something that we assess. Actually, is who are the other minority shareholders, so that we can work with them in case there would be a need for collaborative engagement. So that's part of our assessment. And in many markets, especially again in emerging markets or places like China, where I'm based, clearly, for instance, the notion of being state-owned enterprises versus being private-owned enterprises is also something we need to reflect on and consider. And we have a lot to talk about here, but unfortunately we are just short of time in general, so I won't be dwelling too much into that. But clearly, the aspect of ownership is really key to our framework and the work we do in terms of sustainable investing.
Sounds good. In terms of creating shareholder value is sort of the focus of my next question. So ESG and sustainability, as I mentioned, has always been a key pillar of East Capital Group and at the core of what we do. But in addition to that, and as important, if not even more important, is obviously delivering value to our investors and creating shareholder value. So the next question really is whether we see a clear link between, these engagements and creating shareholder value. And one example is, for example, if you see improved governance standards, can that lead to an uplift in valuation multiples? That's just one example, but I wanted to ask you, Karine, how you see this link between engagements and actual shareholder value creation.
Absolutely. So I would like first to highlight, to remind our audience that when we manage two funds, which are called Article 9 fund under the European regulation of the SFDR, and these funds have sustainability as their objective. So, of course, when we are engaging with companies, we also have to take into consideration this objective. But this is not the only objective, obviously. The objective would always be for us as an asset manager to create returns for our investors. And here there's a number of mechanisms which, of course, would have an implication on how you actually pricing these assets. So the work is obviously focusing on how we identify which are the engagement which will matter the most in terms of being financially material to the company, and making sure that these companies, for instance, will be discovered by other investors. There is evidence as well of a clear link between, for specific, corporate governance issues with valuations. I could just, of course, mention capital allocation. We've done some work pushing companies to pay more dividends. We've done some work as well, making sure that there is proper board independence that will then ensure that we have better capital allocation practices and so forth. We don't have much time to talk about it today, but of course we also have in the Sustainable Investment Report a big part related to our real estate investments. There it's clearly as well that it's clear really that of course any investment we make, this is more, we call it the active landlordship of improvements, such as installing solar panels or making sure that our tenants gets a better work environment, would also have an impact of course on the value of the assets. And last but not least, a part of the work we do is engagement with regulators. I had, as yesterday, for instance, discussion with the Shenzhen Stock Exchange. We were discussing on the topics of clearly pushing for better, I would say, shareholder-friendly measures. We have a lot going on as well in Korea. I had a meeting last week with the Korean Financial Supervisory Authority. So this is also part of the work to make sure that we are eventually creating, of course, more returns for investors by increasing the valuations in these markets.
That's great to hear. Thank you, Karine. Moving on then, we have two proprietary ESG tools, the ESG scorecard, as well as something called the SDG value chain analysis. And these two tools have been and remain a core part of our ESG integration work, particularly in our East Capital Global Emerging Markets Sustainable Fund. And in 2022, the UNPRI actually included this SDG value chain analysis tool as a case study in one of their publications, which was titled Responsible Investment and Sustainability Outcomes in China. So question for you, Karine, how would you say that this tool in particular helps us and makes us confident that it is indeed possible to invest sustainably in emerging markets, something which has been obviously discussed frequently in the past?
Well, first I would like to highlight the fact that we are using our own tools, and this is quite unique as far as we know, because a lot of our peers are actually more buying ESG data. The fact that we are ourselves doing the work of assessing this sustainability practices or corporate governance standards and so forth brings us much more insights, because it is really like a full integration, because most of the work is actually done by investment teams. So we also then use this because it guides our stewardship priorities, which is also really, really key. But to go back specifically to this tool, we are very proud of it because it's been really helpful. The idea is that, instead of just looking for solution providers, you also look for companies which are operating in a way which is sustainable. And so we have the same kind of concept of scopes like you have within, the greenhouse gas emissions, scope 1, scope 2, scope 3. We think that we also have the dimensions of seeing how your products are being used, for instance, in a sustainable way, or how your suppliers are, using sustainable practices. So that's something that is really key for us. And I like to finish here by saying that actually it's been very useful for emerging markets. And we do think as well that this could be applied to developed markets. So this is something that we are inquiring right now and investigating how we could use it even in a broader way within East Capital Group.
Thanks, Karine, and that makes a good bridge over to Huizi then, who will answer my next question. As I mentioned in the beginning, Huizi manages our Espiria SDG Solutions Fund, which is one of the 2 Article 9 funds in the group, alongside our Global Emerging Market Strategy. The investment universe for this fund is defined by 5 core SDG themes, and in the Sustainable Investment Report, we actually illustrate the progress being made across several of these themes. And just a couple of examples here. Last year, there was a 72% increase in the number of electric vehicles sold compared to 2022, as well as a 44% increase in renewable energy capacity enabled. And this list can go on and on. So Huizi, my question for you is whether you can comment on how your fund, the SDG Solutions Fund, is well positioned to really benefit from these strong structural growth trends which we're seeing within the investment universe.
Yes, sure. So before I go to the strategy part, I think it's important to kind of point out that why we're actually reporting the outcomes across the SDG targets that fund has invested in. Number one reason is that I think we wanted our investors to be able to see that they have directly, through their financing to the fund, contributed, apart from getting financial returns, contributed to a certain diversified basket of targets, as you could see on the slide upcoming. And also we wanted to kind of monitor and ensure that the desired outcomes actually achieved, because we know that investors buy into Article 9 funds generally have higher expectations to see tangible positive changes because of the financing. And we want to deliver these results very clearly, even if it's not clearly kind of defined how it should be done in the regulation requirements. So another important reason we are tracking these outcomes is because of strategy setting and stock selection criteria, which is based on finding companies that have the right strategy and business model set up. So we're not talking about, when we're talking about positive impact, we're not talking about that it comes at a cost of lower growth or loss of profitability. Rather than we only invest in companies with structured drivers, and when they're able to integrate sustainable solutions into how they set up future growth strategies and also the business model, and that will allow actually 100% alignment of the financial gains and impact, meaning that higher revenue or profit, the bigger the impact, so which has been the case for our holdings in this fund. So on this slide, you will see actually the numbers of the outcome impact growth year-on-year comparison in the red circles are quite high across many of the themes here. And these are just numbers that reflect actually behind these numbers also reflect very strong either top line or bottom line growth across several segments. So this really is what we're looking for. In the last slide, maybe I can show you one example to see sort of how we align the financial aspect as well as impact. So this is when we talk about EV, for example, that Marcus, you mentioned EV. So I will elaborate a bit more. I mean, it's quite clear that we can actually even calculate, at least with estimation on how the carbon impact would be by driving EVs instead of diesel car. So if you're driving from Stockholm to the south of Sweden, which takes about 6 hours, you actually clearly can avoid 75 kilo CO2 emissions. And we can translate it into, of course, the numbers that when car manufacturers, EV manufacturers are actually producing or selling the products. And of course, given that there is a possible linkage here, we want to identify companies that actually do ride on this trend, possibly through the financial revenue growth and margins, and that's how we actually align the structural trends here with investments.
Thank you, Huizi. And you used the example of BYD on the slide there. And one of the things actually which I thought was quite interesting and impressive when reading through the Sustainable Investment Report was our engagement last year with BYD, together with other asset managers, actually leading to them appointing a female board member, something which they had actually lacked completely in the past. So again, just circling back to the importance of collaboration, can you briefly comment on how Espiria is collaborating with other investors and asset managers to influence large global companies like BYD and others?
Yeah, right. So I think when it comes to active ownership engagements, we don't only do collective engagements, we also do one-on-one dialogues with companies, depending on sometimes the size of the company and whether we can actually pull a large amount of investors to actually pose more influence on the company, and also pooling our knowledge together. So this usually applies for slightly larger companies, which includes BYD and other names like CATL, a Chinese battery maker, which is the largest in the world. We also engaged with Bank Rakyat, is an Indonesia bank, and also some European companies broadly. So I think the strategy here is that we really want to kind of see where we're adding value, and together with other investors, we usually can have a quite active dialogue with the senior management, where we can understand how things actually work in realities, and find out more information that usually wouldn't come out in a normal financial due diligence or research process when we're visiting the companies. So I would say that's a general approach we take. And also want to highlight, actually, you mentioned value. What kind of value are we getting out of this active ownership? To investors, I see it in two ways. Number one is that we are understanding the risk is much better. Take an example again here on BYD or CATL. When we're talking about board composition, we're able to kind of influence and understand the risks on strategy, future strategy making, decision making in general. And when we're engaging on the topic of climate change, I think we're able to kind of identify how this company's long-term risk actually is. Are they prepared for the transitions or not? And even when we're talking about supply chain management with these companies, trying to kind of get more transparency into the value chain, it's also relevant for identifying short-term, near-term risks in their operations. And that's, I think it gives good explanation on how we kind of use the information for better risk judgments. And the second thing would be actually even we can find opportunities, in new investment opportunities through this process and dialogues with the companies as well on our engagements. One example is that when we're talking to Danone about their use of plastics in their products, I think it's quite clear to see that there was a gap on their recyclable products or packaging, and also how much actually get recycled. And they do set different targets to show the investors. So I think when you see there is a strong gap and that cannot be closed easily, you kind of start thinking why this has been the case. Talking to companies, and we understand that there is a sort of a value chain impacts here coming in as well. It's not entirely ready in terms of how you can recycle products effectively across global markets. And therefore, we actually can identify other solution companies that can address this issue. So I think risk and opportunities are kind of value we're getting out of this.
Thanks, Huizi, for that great run through. A lot of different things to go through. Unfortunately, I see we're running a bit out of time. But as I mentioned in the beginning, this is all covered in detail in the Sustainable Investment Report. So I hope you all have the chance to read through that. Before we round off, I know Karine maybe has a few closing comments and remarks. So Karine, I'll hand over to you.
Yeah, first of all, I just wanted to say this is the 8th year we publish a sustainable investment report, and we always welcome feedback from clients on the work we do. This report, we welcome feedback from clients, we welcome feedback from portfolio companies. Actually, this report will be sent to our portfolio companies. We issue a letter every year, and as well we issue a letter to our new portfolio holdings, where we basically disclose as well our approach, the work we do, and the results, and so forth. So it's for us, it's always with great pride that we present these results and our approach, because we think it is adding value, but we're also very humble to understand the challenges, the difficulties, all the hard work behind it. So as I was saying, basically, if you have any comments, any feedback, any questions, please reach out, and we'll be very happy to have a dialogue with you on these topics. Thank you.
Thanks, Karine, and I can just echo what you say there. So to our viewers, thank you very much for listening in today, and please do reach out to me or any of my colleagues in case you have any questions or would like to hear more about the work we're doing on the sustainability front. Thank you again, Karine, and thank you, Huizi, for sharing your knowledge, and thanks again for listening in.